Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's December 12th. This will be our chart lesson for the day. And a couple things before we get started. First, today is rollover day. Generally, we don't roll over on the first day. I get that question a lot. I mean, you can see this was a great day. If you look at the other chart, you'll see that it's um, there's not much volume in it. So usually it's rollover usually comes on a Thursday, starts on a Thursday, and it's usually Friday. And every once in a while, it's the next Monday before you really want to change contracts. But what I'll do is I'll open both contracts tomorrow, and I'll look at both of them, and whichever one has the most volume, that's the one I'll go with. And generally, it's on Friday most of the time. The following day, you'll probably want to switch over. As you can see, today was a very volatile, crazy day. Lots of trades in here. You had the little stretches where you just had to kind of sit and watch, but there's so many trades in here, and there's so many. Uh, One good trade right out of the gate this morning that if you caught that one trade, you probably all you needed for the day. If you catch one or two of these on the way up, it's probably all you needed. But anyway, turns out to be a pretty good day. The other thing is I just wanted to look at the calendar about Christmas. I'm probably going to work most of next week. I may end up taking off a couple of days early, but um, I'll probably work through Thursday and do our usual things through Thursday, and then I'll probably take off the rest of the year. And so I just wanted to kind of give you a heads up in case I decide to take off a couple of days early. I may work through Wednesday, and I may even take Thursday off. It just depends. I'm gonna kind of go play it by ear next week, see how I'm feeling, uh, see what's going on, and just kind of play it by ear, really. So, but I know I will take off definitely from. Of course, we don't do chart lessons on Fridays anyway, so I know from the 20th to the 2nd there won't be any chart lessons, and I will be out of the office most of that time as well. So. Uh, But anyway, I'll kind of keep you posted about next week, and if I decide I'm going to close it up on Wednesday, I'll let you know. But otherwise, it'll be Thursday. But I'm assuming I'll probably at least work through Wednesday. So, and then I'll take the rest of the year off and spend it with my family and do some Christmas stuff and take some time off and that kind of thing. The market a lot of times will get slow during then. Doesn't mean it necessarily will, but sometimes it does, especially from Christmas to New Year's. It usually gets pretty, rather slow during that period because most of your large institutional type traders are taking vacation, and they're closing out and manipulating and moving things around to their year-end adjustments or whatever. So that's what I'm trying to say. But anyway, just keep that in mind. I'll keep you posted next week as how it goes. But no chart lesson tomorrow, no chart lessons on Fridays. And I think that's it. But you can see today, the market opened over here. It looked like we went in this real tight range, and then suddenly we burst out of there, and look how it moved. The first thing I would do is I would measure this first leg and then look for a measured move. And one thing I probably I don't always remember to mention, but if you've got a measured leg up here and you don't quite get it, a lot of times that'll mean it's going to be a range day. But this is not a range day because your overnight highs and lows are here, and you've already had two big moves up. But what'll generally happen if you don't reach that target, you'll get a fairly large move or a reversal in the other direction. And this looked like it was going to be a reversal. Turns out it's just a nice move back, and then we bounce from there, and we end up moving higher again for the day, back up close to the original highs. Not quite. I mean, that was a really big move. So I'm not sure if we made an all-time new high again today or not. I can't remember what the all-time high was, but we're getting close if we didn't. So um, just keep that in mind. But anyway, we had this trend up. Looked like we were going to a flatter channel, but it just kind of reversed and boom. And then we got about a 70%. Usually that's what'll happen. You'll get about a 50 to 70% correction. And if you're going to start working higher again, you'll work up from there. But that's a clue that you might get a reversal if you miss that measured move by a reasonable amount, and suddenly the market's going in the other direction. You may get a big move in that direction. So just keep that in mind. But anyway, I'm going to back out. We'll talk about the trades. There's quite a few of them here. It'll take a minute. There was a lot of volatility today, extremely large amount of volatility. So, but anyway, 7 o'clock came right down through this little move right here, and then we just started kind of working sideways. You need to be careful looking for a long here, and you can't really get a short till you get a setup. And somebody asked me about this trade. They got tripped up here. If you notice, there's a new low there, and you go first entry, and then there's a nice bearish bar, second entry short, and it fails. But what you have to remember here is this is a correction, and this is what trips most people up. They know they need to be looking for a short, but they're not sure when to go short. So what you have to do is you have to let this correction play out. And generally the way you do that is you wait on a lower high. And if it's coming off the bottom, you wait on a higher low, like right here. And if you do that, you're more apt to get it right. Now, if you get a close outside and a new high here, you might take that one. But if you notice there's a trend line working up here, and that second entry short's the first close outside. Plus, the other problem you got is you really got a lot of sideways action here. And this could be a failed breakout, which, I mean, even here it looks like a failed breakout somewhat. So it's tempting to take that, but this is what will happen to you sometimes. More times than not, you'll probably be right taking that, but sometimes you'll get burned. And that's what happened here. So if you got fooled there, you're not the only one. It happens. But really the only way to make sure, to be 100% sure that's not going to happen to you, is to wait on the lower high. And even then, you could still miss it. You could be wrong. But if you were reading this, obviously you've already got a close or two outside a new low. So if anything, you might get a reversal here. But you need to let your trend line play out, and you want to make sure you've got a reversal. And nothing here is hollering, screaming reversal yet. So I'd still be, really, you should still probably be looking on maybe another leg down or a retest of the low, that kind of thing. So if you were looking for a short here, you were doing the right thing. Unfortunately, if you took this one, you were early. And that's a good looking second entry short, I'll be honest with you. And it actually broke higher first and then went out the other side. Actually, it didn't go out the other side. It made a 2-bar matching low. And that is a clue too, because technically if this thing was going lower, it probably should have pushed on through there and at least close, even if it closed even or back up in this bar, it should have at least broke lower. And then you could, but when it made that 2-bar matching low, maybe this move up isn't over yet, and you wait and see what happens. And you notice the next one up here would have worked. And then, but if you wait on the lower high, you had the better move, and then it actually comes back and gives you a failed second entry long, and you're back in, now it gives you another test of the original resistance area right there and a big bearish bar. So that was the better place to go short, here and here. So rather than, even this one would have worked, but I think that actually one trader actually went short and got fooled, and then they went long here and got fooled again and had 2 losers right out of the gate. So you had the right idea, but just because you were early doesn't mean you were wrong. So you had the right idea trying to go short here, but you were just early. And then, so you weren't necessarily wrong. Where you were really wrong was when you went long here, because you're completely wrong because the market's trying to work lower and you're really in a trading range here almost. So you're going more sideways than you really are going up or down. And when you're doing that, you got to be careful of second entries and failed second entries and all that anyway. So just keep that in mind. But I could see why anybody that took that trade would like it. It's a good looking trade. But you just were early. And that happens sometimes. So use those trend lines. Make sure you're watching for the ranges, because I know that trader, all he had was a trend line on there. So, but anyway, those were a couple of nice shorts. And then, of course, you made that low and you test it once, and really, the way I was looking at this was a double test of this low right here. I actually would have moved that up by now. So you made the low, you test it once, you test it twice, and you get this small bar here. And actually, I would have moved this up by that point, and so it gives you plenty of room to get out there. And that's a second entry long. Notice that new high, first entry. So actually, the second entry was right here. But you actually could have entered right there as well. But I like waiting on the higher low, which came here. I would at least mark that one green. And this is your better trade. But you could have entered on either one of those really. But if you draw your trend line here, you can't be sure that this move is over yet really. It kind of fits down through there like that. So you were better off to wait on this one. And if you caught either one of these, man, this thing rocketed out of there. And it never really looked back. And it's really just too dangerous to enter on up through here. I mean, it's a big move, and you hate to watch that go without you. This is what trips people up more than anything. They'll start trying to pick a top up here, or else they'll start trying to jump in, and they might jump in here and it runs up and runs right back down, stops them out, and then goes right back. This is starting to look like a really strong trend in here, but I just think you're better off to sit out of that. There was no reason to expect this to really happen here. It's just one of those moves that sometimes you get that if you didn't catch the original move, when you start to get that far away from the EMA for that long, it's just too dangerous to enter. And if you do suddenly top out like this, and it looks like you've got a two-tiered channel, or you're an overshoot or something, and you get that lower high, and even the lower high is still that far away from the EMA, take that trade, because this thing may reverse. If nothing else, you can at least ride it back to the EMA and get an easy scalp, and that's what you got here. And then you just kind of start working sideways there. And notice you made that little low, first entry, or first test, second test, and plus there's a new swing high, so it's a second entry long. It's a bounce off where you would think this trend line would be. What I did was I originally drew this thing off right here, thinking it was right here. And you can see that fits nicely on both sides, but I ended up adjusting this later. But you wouldn't want to drop it down here to the lows. And so when that comes into play right there, you don't even need that trend line. Even if you didn't see that, doesn't really matter. There's a double test there. There's a second entry long. Notice that little new swing high, first entry, pulls back, second entry. Nice bullish bar. Everything's closing above the EMA. I like that trade. And of course you come up here and you push a little higher. So it's like a little breakout pullback, plus it's a second entry long. Notice that new swing high, first entry, and then second entry. And again, it's confirming that trend line right up through there. It is a little close to the highs, but this thing is looking like a really strong move now, and you want to be looking for that measured leg, which is way up here. And so you get another chance, and you get another runner here. It just keeps going. And you don't really get a good chance to go short up here. And at this point, I'd probably forget about shorts because you may be working on that second leg. And so I would just sit tight and try to get a long to get a retest here. And you could get a flatter channel like we did, even though it didn't last very long. And it runs on up and then pull back. First entry, second entry, and you get a little support right there. It's really a double test from over here like so. But you also want to draw this flatter trend line, and you get a couple of bounces off that as well. And it actually, looking back on this, I probably don't have this steep enough. It probably should have been off those closes. And you know, sometimes you think you're smarter than the market, and but if you draw it like that, now you get your close outside a new high, and that explains the reversal. So even on this secondary channel, so I didn't draw that quite right. And you can see how being off just a hair there can sometimes trip you up. It didn't really make any difference because you didn't get any I guess it would have made a difference because you might have wanted to take one of these shorts in here. Still, I don't think it did because you don't really get a failure. It's too sideways here. You're going short into support. Same thing here. There's no break higher. There's no good signal bar. There's just not any real good way to get in this trade right here. So it didn't really change anything other than I probably would have. I don't think it really changed anything because this was your long right here, and on your second entry, looking to try to make a new high here at the very least, and you would have had to kind of ride this out a little bit, but it still was a good trade. And then when it comes back, you still only get a first entry right here on this nice signal bar here. So, and you'd just be looking for another leg up at that point, but still I would probably mark that green because you've already had a break a new high and you're not getting a second entry. You might look at that as a trap when it broke below those little 2-bar matching lows and then turn back up. But I'd want to wait for that bar to close before I'd go long regardless. And still, I think it's a little bit aggressive. Because if you drew the trend line the way I originally did, it didn't quite get back to the trend line. So it just was bouncing off the EMA. And you could have looked at it as a higher low. That's basically the way I marked this originally. But now that I'm after the fact, looking at it a little closer, I think this is probably the better trend line, and I drew it wrong. But again, if you read the price action properly, it still all works out here. So there is a little second entry short here, but you're not really looking for shorts at this point. This is still a strong trend, and the fact that it reversed here so strongly was a little bit surprising. But again, if you drew this properly, you see the little break and a couple legs up, and then it's not so surprising what happened. Really, I wouldn't look at this as a downtrend starting until this next leg. And of course, the first thing I would do is I would measure this leg. I'd look for that measured move at a minimum. And you can see we got there and we corrected a little bit and then we started down again. So this was a big sell-off. But anyway, you just don't get a good chance to enter any of this. You just don't want to enter short right in here. It's not a good idea. It worked this time, but next time you do it, it won't work. And that's our deal is we follow the rules and we don't gamble. And you're gambling if you go short there. And yeah, you see all this coming down here and it's tempting, but just let it go and wait for your next setup. And then you get a correction here. And notice this lower high right here with a big bearish bar. Go short right there. And if you still weren't sure when you get the failed second entry and another bearish bar like that, then go short. And again, it probably would have tripped you up a little bit because it's going sideways. But if your stop's where it's supposed to be, it doesn't really come close to getting stopped out, and it ends up dropping on down. And it was a little bit tempting right here, but again, by that time you have 3-bar matching lows and you're kind of stacking up, and so I wouldn't enter right there. If you didn't get in on these first two, then you just kind of have to watch this, and you really don't get another chance. You do come back to the trend line right here, a little break higher, but again, then the next bar is an inside bar, and just wait, you'll get a better entry. And it finally comes back to the trend line in the EMA right here. And that's still 2 legs back. Even though that went lower, you can see that real easily. That's 2 legs back. Relatively bearish bar right off the trend line, right off the EMA. And you could look at this as a little double top with a lower. You're making a little lower high each time on that. You got plenty of room to scalp out. That's worth risking right there. Comes back yet again and gives you another bearish bar. But again, it looks a lot like that right there, just kind of going sideways. And you see it does come back, even though it wouldn't have stopped you out. That's too dangerous to enter right there, right into all those lows. I don't have my line there, but let me put it on there just so you can. And you can see all those lows. You just can't go short into that right there. And then it tries to go higher again. But this is really your signal bar, too bullish. This is an inside bar, again, right into those lows. Of course, it takes off, but you can't risk that. So then you bounce, come back, lower high, you get a first entry. You actually get a second entry short right there. Not a very good signal bar on mine. I think it was worth skipping. If you had a good signal of the bar there, and maybe even especially if it broke higher and you got a second entry short, I'd take that trade. And you might even argue for that one to be at least green, but we've had a big move down, and we basically have already passed that measured move. So I think it's a little risky. But when you get the failed second entry long right here, notice that eye, first entry, second entry, and it fails in another bearish bar right at the key entry point, you probably take that one. And now you got plenty of room there. That's your better setup. It actually pulls back again right here. But that's just a first entry short or whatever. So turns out to be another nice move. And several of these coming down, as far as several, a couple of these going up, you would have had some incredible runners, some nice runners too. But this one drops on down here, and then you get a higher low right here, way away from the EMA. And you've already had several closes. You actually had a bunch of closes way up here, and then you got a couple more right in here. It's like it reset or something almost. And then you got a couple of more closes outside and a new low. This is still aggressive here. I made it green, but it actually broke lower and turned and went out the other side. You don't want to wait till this closes and then go long right into that trend line, but you're overdue to come back to it. And so when it broke above right there, if you've got enough room, you might take that trade on a higher low right there, especially with that little trap like that and not making a double bottom, because that looks really bearish. And this is what most people do. That's where you have to enter. And most people see this and they'll say, well, I'm late, but I'm going to enter right here. And they enter right here, right into the lows of the day, and it goes one tick lower and turns immediately. When it does that, guess what? You're trapped. Take advantage of that trap. Look how quick that shot out of there. That's because all these shorts realize something just changed, and a lot of them that were piling in here at the end, all your weak traders, they all jump in when it's too late. They've missed all the good stuff here, and they jump in, and then they all have to exit. And that's why that rockets up like that all of a sudden, because all these shorts start exiting. And look at that thing go. They were all trapped. And so you want to take advantage of that trap. If you understand what's going on, take that trade. Runs up. Here's another instance where you're moving up a couple of times and you get a couple of shorts, but notice you got to close outside a new high, a big bearish bar. That one's tempting because there is a little room back to the EMA, but again, you probably want to wait on that lower high and you don't get one, and then it runs up and makes a new high again. And then see, finally you get a lower high. It broke higher, came down. There is a little 2-bar matching low, but this was starting to look like a range, and we're back inside it, so we're probably going to the other side. So I'd probably risk that on, and that's you can look at that as a second entry short, really, because you got your first move down. Actually no, scratch that. You just want to look at that as a lower high. If that had made a little higher low right there, I'd call that a I'd look at that a little differently, but the fact that it's got the 2-bar matching high, that's just a lower high. That's what you want to look at. There is a failed second entry long right here that's kind of tempting, but it's right into the lows of this thing here, and this is, it's starting to look, hey, this is starting to look like a range. We may bounce down here, and guess what we do? And again, I'd probably want to wait on a higher low here, but you may take that one because you do get a break outside and a new low, so you've got everything in place that this may bounce in reverse. And then of course it comes up here and it actually breaks higher here, hits that resistance area, turns down. So when it goes out right there, just go short. I don't know if I'd wait till here because you don't have much room, but when it broke below here, just go short. And where do you expect to go? Here. And this thing actually pushes right on through, but guess where it bounces? Right where you draw that trend line, and it gives you a reversal bar, and you got a little bit of ways back to the EMA. You may catch the low of the day right there. You might catch an important low or something. Wouldn't be the low of the day, but it would be an important low because it's just a failed break lower. And this is close to being green because generally you want to wait on a higher low, but you can look at this one as a failed breakout, and that is a really nice bearish bar, and because it's off that trend line, it confirms it. that kind of makes it a little different. Here's the higher low, but you don't get a setup over here. There's your signal bar, and it's too bearish, and this is your inside bar, which is a little more bullish, but it's still not a perfect or really good signal bar, and it's inside bar, and they're just too unreliable. And as you can see, you missed this trade, unfortunately. Nice trade. We run up, and look how far away we've got from the EMA again. But this is why I like this one. It tries to go higher once, twice, fails. So if it breaks below there, you actually had a higher low right here, way away from the EMA, but it's still inside that trend line. But if it breaks below this bar, we're probably at least going back to the EMA. So what you might do is let it break lower right here. When this closes, let it break lower and then drop a limit order back where this one was originally and see if it'll back up and fill you before it goes on down to the EMA, because it could hit the EMA and go higher again. But if you drew this trend line and moved it up here these highs and dropped this midline in here and you see everything fitting, that kind of helps you with this short as well too. And you might even take that lower high right there. You're so far away from the EMA, but the reason that I'd say no, again, I'm gonna go ahead and mark it green, is because you've got that trend line working up there and you can see it. Price is playing off of it. So, but when it tries to go 3 times higher 3 times and fails, we're coming, we're overdue to come back. So, and notice you get a little second entry here. You push on down, pull back first entry, pull back second entry, big bearish bar right there at that trend line, and boom, it runs on down here and it bounces right off that larger trend line of this 2-tiered channel. This should be, I usually make this a little lighter. But if you'd had a good signal bar, you might have considered going long right there, being that far away from the EMA. Here's your higher low, and I probably would have marked it except for all this resistance right here. It still would have worked, but you just, being 2 o'clock in the afternoon, 5 minutes into the 2 o'clock hour, you got to be careful. And it did go higher and it would have worked, but notice how it comes back. It still wouldn't have stopped you out. And let me explain that real quick. I had a trader send me something today, and he's entering, and he's just to say he wants to enter on this bar. He puts his buy stop right there, and wherever his 2 points is, that's where he was leaving it. You can't do that. If you enter on this lower high right here, your stop can't go anywhere but below the swing low, which is below that signal bar right there. If you put it anywhere else in there, you could get stopped out on noise alone. There's a reason why we put it where we put it, and that's to protect it. Look at every one of these swing lows and swing highs. Prices generally don't breach those areas unless they're going to continue in that direction. Notice we breached this right here, but then we ended up going higher. And notice we never breached any of these coming down. And that's a reason. Even that one right there, we tried to, but we never could. Same thing here. All these swing lows, all these swing highs. That's why we put, even right here, look, there was your swing high. We tried once, we tried twice, we couldn't breach it, and then prices go the other way. There's a reason we put those prices. You can't, if you got a big bar, let me just find one. Let's say you want to enter on one of these big bars. This one's fairly big right here. If you put your buy stop here, and then your stop automatically drops in at 8 ticks below, it might be somewhere right in here. And prices a lot of times will pull back. They'll never go below that low. Like here's a good example right here. That's not a good signal bar, but assuming you were going long, prices pull all the way back almost to the low, and you'll see sometimes they'll pull back, just like right here. If you'd have went short below there and you put your stop anywhere but above that high, you would have got stopped out, only to have it right. Notice how prices tried. They couldn't get higher. Then they tried again. They couldn't get. There's a reason why we put those stops there. Your stop always goes below the signal bar, and your signal bar was always the lowest bar in the swing low and the highest bar in the swing high. Anything else and you've got it wrong. If you entered, say, on this This bar right here, well, let me find a good example. You might have thought where it broke lower somewhere it was the swing high, and it's not. Like right here, if you entered here thinking this was the swing high and you went short right there when it broke lower, it did still turn out to be the swing high, but this could have went higher. It happened over here somewhere like right in here. That looks like that's going to be the swing high, and it breaks lower right there, but then it works higher. So hopefully you understand what I'm telling you there. There's a reason where your stop, why your stop goes where it goes, and you can't put it anywhere else. So if you're trying to follow the rules and you're staying on 8 ticks, but you're not getting above or below the signal bar, depending on which way you're entering, then you're going to get stopped out a lot on perfectly good trades. A lot of times you're going to get stopped out on good trades. Right here is a good example. Notice how that went higher, and then it pulls back, but notice how prices never got below there. That's a good sign. And then it goes higher again. And that's why your stop would be below that bar. And if you were riding them anywhere else, you would have got stopped out right here, only to see prices go higher. So hopefully that makes sense to you. But anyway, it's a long chart lesson, 30 minutes today worth today. So I'm going to wrap it up. Hope you had a great week. It's been a pretty good trading week actually, but we'll be back again to do it Monday, and we'll kind of play the next week by year to let you know. But I will be out the last week and a half to almost 2 weeks of the year on vacation for the holidays, Christmas holidays and all. And but we'll kind of play that by ear next week. So anyway, I'm going to wrap it up. We'll be back Monday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.